the fact that we are moving into or have already embarked on this new energy transition, and that in itself is driving, in our view, a new commodity super cycle, which includes copper, because electrification is a big part of this transition.
2025, we could be in a really, really interesting environment for copper where, we're more likely to be in deficit, I think, by then than surplus, I have to say.
We are targeting projects in South America, in Chile, which is obviously the world's #1 copper producer. It's a good place to do exploration.
Okay, so I'd like to welcome everyone today to the one-to-one group and the Assay Live copper webinar. Today we're really going to be looking at supply, demand, pricing, general outlooks for copper as we kind of get to the end of 2021. So I'd like to welcome today Jessica Fung, Head Strategist at Pala Investments, Dan Smith, Managing Director, Commodity Market Analytics, and Max Tuesley, Managing Director at Culpeo Minerals. So thanks to all of the panelists for being here today.
Pleasure.
And I'd like to encourage everyone in the audience to ask questions during the session. So at the bottom of your Zoom screen, you'll see a Q&A box, and definitely feel free to type in any questions that you might have for our panelists in that Q&A box. And we will take the questions as they come. We've also taken a lot of questions ahead of time that everyone submitted while they were registering. So we will try to get to all of the audience questions throughout. So I suppose to kick things off, we can look at supply, demand, and pricing. So there was a predicted surplus of around 79,000 tons this year, the price of copper really has hit highs that we haven't seen in many years, since about 2011. Where does our panel think that they see mine supply heading over the next few years? Do you think that we're going to be coming into a deficit, and what sort of impact do you see coming from that? So maybe Dan, if you want to kick us off here.
Yeah, sure. So yeah, we've had this kind of big ramp up in copper prices, and then obviously a pullback in terms of the past few months. So I think copper's in this kind of phase now where people are not sure where we're going to go next. I mean, I think one thing that's kind of changed a lot in the past 6 to 12 months, of course, we've had the COVID crisis, but on the mine supply side, I think a lot of people have come to accept that there is now a pretty decent amount of mine supply coming through. So if you track things like treatment charges, they fell to pretty low levels back in about April, but since then they've been rising fairly significantly. So this tells us, of course, that relative to smelter demand, mine supply is actually growing pretty quickly. So, there are these kind of key projects where, there's this kind of rule of thumb within copper that mine supply should react after about 10 years of higher prices. So funnily enough, the previous price spike was 2011, the really high prices. And of course, now we're 10 years later and these mines are starting to come through. So it's a bit of a coincidence, but nevertheless, there are a lot of these big mines coming through at this point. So there's a few key ones are kind of Grasberg in Indonesia, which has been expanding. Spence in Chile is another one, which is coming online shortly. And then the kind of continued ramp up of Cobre Panama. So those are the kind of expansions of existing mines. And then, of course, we have things like the OT mine in Mongolia. So, again, that's in theory expanding, although that's quite a troubled operation, as I'm sure many people know. So that's my take, is that definitely mine supply is going to rise pretty quickly this year. We could see a double-digit jump, I think, possibly. But definitely we're moving in the kind of, moving to oversupply, I think, in terms of mining. That's certainly my take. Don't know what how Max sees things.
Yeah, I tend to agree with you, Dan. I think from a technical point of view, these mines have been preparing for these ramp ups. They have been doing putting in the additional capital expenditure. So, they, as you mentioned, they probably saw this on the horizon. Um, Probably a little bit of room there for some new smaller mines to come into the pot as well. Not a lot of large. You sort of hit the nail on the head there with the large projects. That's pretty much all of the large projects. So there hasn't been a big discovery, I suppose, with the larger ore bodies. So I think you're right. The capital's already put into those big projects, and probably a couple of smaller ones coming online that'll also bump up the amount of copper out there as well.
Yeah, I mean, the only other one I would add is, of course, Kamoa in the DRC, which is the other big one that's kind of come online this year. So, I guess you might have some insight on that, Max, but it seems to me that's going to be, I mean, that's what the big exception, isn't it, really, in terms of new big greenfield mines that have come on recently, I suppose, apart from OT in Mongolia. But, as you say, there aren't that many discoveries, but DRC, of course, is a kind of big area of growth kind of right now.
Yeah, absolutely. Those deposits in the DRC are, although they're underground, so the production rates are going to be a bit less. The grade of those ore bodies is substantial, so they will deliver quite a bit of copper to the market as well. I agree.
I'm going to take a different view from you guys and say that, the 79,000 ton surplus, whoever's prediction it is, because obviously everyone's got different numbers, that to me is a balanced market. When you've got a 23 million ton a year market, 79,000 79,000 tons on either side of plus or minus, that's balanced. I mean, that's only 0.3% or something like that of the market. So it's a very, very small number. And so to me, it's balanced. I think the bigger picture that we need to look at in terms of prices is thinking about the demand side of the equation. The fact that we are moving into or have already embarked on this new energy transition, and that in itself is driving, in our view, a new commodity super cycle, which includes copper, because electrification is a big part of this transition. And so whenever we see this type of commodity super cycle, the last one, as everybody knows, was China, but whenever we see this singular driver that is driving demand for certain commodities, not all of them, but certain commodities like copper, we need to see this structural step up in price in order to incentivize the new projects. Because what we also know on the supply side is historically, we only ever grow copper supply with greenfield projects. In aggregate, despite the fact that we do have a lot of these large expansions, declining grades and at other operations, there are some operations that are depleting. In aggregate, we tend to stand still in terms of output from existing operations. So we need to see greenfield projects get developed in order to meet this demand that's going forward. And so in my view, we need a structural step up in price to incentivize these projects because we're entering this commodity super cycle. So that's the angle we come from. And 79,000 tons is not a surplus. That's definitely a balanced market. And so in that kind of environment, you are really thinking about the future and how to grow enough supply to meet demand that's coming.
What sort of pricing do you see is needed to incentivize that growth in the market or incentivize further exploration?
Well, I think it's no coincidence that we've seen long-term prices over the last 12 months in terms of consensus expectations. So this is not ours, but consensus expectations have moved up. We used to sit at about 6,800 a ton, which is about $3.10 a pound. And now consensus prices are sitting around $8,400 a ton. So we've seen a 24% increase in the long-term copper price expectations. And I think that's probably where we need to stay at, or at least sustain, in order to incentivize copper projects, sorry.
Yeah, I'm happy to just add on that. I mean, I think you're right, Jessica, that the, it's not, but of course it's not just high prices, but it's continued high prices. So we all know that copper mine supply takes a long time to react. So we have this sort of rule of thumb, right, which is 10 years roughly, but can be a lot longer, of course, can be a bit quicker. But yeah, I think you need to see high prices and continued high prices for several years, and I would say that's probably in the range of 7 to 10,000 kind of thing. But of course, it doesn't mean you can't have cycles within that. So my argument is definitely that I think we're going to see a sort of downward trend in copper prices over the next couple of years, mainly because we have this kind of, at this point, I would say that we could easily see double-digit growth in mine supply. And while I agree with your argument about the super cycle that demand growth will get boosted, I don't think that's going to be enough for the next year or two. I think for me, the super cycle is more of a kind of 5 to 10 year view still, just because at this point, the kind of whole green energy impact on copper is still quite small. So I would say it's probably about 5% of copper is really going into that kind of green energy stuff. So, the building out wind farms in China and these kind of things. So that's not quite big enough. And even if we look at EVs, I don't know if we're going to come on to this later, we all know that EVs is still a small part of the car market. So in China, it's about 10%, but in the rest of the world, it's more like 5%. So, that's kind of, even if it's growing quickly, that's not quite big enough yet to really move the needle in terms of the demand side, I would say.
So it's interesting. You start to talk a little bit about these kind of new applications, the green energy thematic that's really growing in the industry right now. So what sort of industries, other than the EVs and the batteries, are going to be, do you think, most reliant on copper moving forward? And has this sort of demand, growing demand in these new energy applications, how much has it been factored into the projected demand over the next decade or so?
Is that for me, Amy?
Yeah.
Yeah, sure. Okay. Yeah, so I think what we know is, when we talk about green energy transition, we're kind of talking about two main parts, really, in my mind. One is obviously the kind of power generation part, where's electricity coming from? So, we're at this point where a lot of it's coming from gas and coal. And then the renewables part of it is rising very quickly. So, part of that kind of build out of renewable power really means that you need a more diversified copper grid to collect that power. And then also you're using a lot of copper, within these things like, solar blades and these kind of things. So there is a massive step up in terms of copper required for those kind of projects. But for example, in terms of EVs, the kind of rule of thumb is that an electric vehicle is going to need 3 to 4 times more copper than a typical vehicle. Now, of course, that's just a rule of thumb, really, and it could be, there's a lot of variation depending on which technology you're using. But, it's going to be a substantially higher amount within an EV. But the point really is, at this point, is still quite small. So, I'm definitely bullish on copper from a 5 to 10 year perspective. I just think it's going to take a while for that demand to build up to a really hefty level. And of course, producers, may or may not react to that in time, which is really why we're having this debate today, I think.
I think it's going to happen a lot faster than you think, Dan.
Right.
We've already seen. So this is what we know on the energy generation side. We know that solar and wind is pretty much at par, if not cheaper, to install, and so that rollout is happening very, very quickly, and it's being incentivized not just by the fact that we want to get our grids to net zero, but it's also the fact that we are trying to reduce embedded emissions in all of the infrastructure that we're trying to build, which includes, we're seeing projects getting announced even at mine sites, right, to build renewable projects, because that's the only way we really truly get to net zero going forward. And so, to your point on the new energy demand for copper, yes, last year it was probably about 5% of copper demand, but by 2025, we estimate it sort of sits somewhere around 10%, and by 2030, we're at 20% of copper demand is being driven by a new industry that is growing so much faster than we've ever seen in the past. And this excludes, and to your point, this is just for, the solar and wind installations. This is just for EVs and charging stations and the batteries themselves. Never mind the fact that you've got an ever expanding grid, which also needs to get rebuilt, by the way. And so that constant growth in copper demand still underlies all of this new growth too. So I think it's happening a lot faster than maybe some people believe, just because we are seeing small numbers. And it's the same thing with the EVs, right? Last year, EVs were 4% of car sales. By 2025, which is only 4 years away, really, it'll probably be somewhere between 12 to 15% of car sales are going to be EVs. And so when you're tripling or quadrupling the amount of copper that's going in these cars, these are big numbers that can add up. So yes, we'll see some mine supply growth, but I also think the demand is going to accelerate a lot faster over the next couple of years. Sorry, Max, I interrupted you there.
No, exactly. One of the things I think you both mentioned there was the need to improve that grid. You're absolutely right, Jessica. The grid in America is 100 years old. So, getting power to those charging stations, if people decide to go with solar energy rather than coal, getting that power derived from those solar farms onto the grid, it's a massive undertaking, and I think one of the things is, even the numbers that some of the governments are estimating, I don't think are calculated correctly. The amount of work that needs to be done in getting these grids up to standard, I don't think people really know how much work's involved or how much capital's involved in that, and in the end, how much copper is required.
Kind of following on from that, one of the questions that came in from the audience ahead of time was related to the impact of the pandemic on the pace of technological innovation when it comes to EVs and renewables. Do you see, what do you see as having been the impact from this? Do you think it's necessarily slowed down this pace of innovation, or accelerated it in some ways?
Yeah, should I kick off
Sure.
on that? So yeah, no, it's a good question actually. I suppose what we saw is that, of course, demand collapsed for many things in the COVID crisis. No big surprise there, particularly anything related to travel and transport. But I think the interesting thing is part of the stimulus is, of course, monetary stimulus, cutting interest rates, etc. But also one of the levers that the government has is to boost things like infrastructure, these kind of things. So those things tend to be, fairly steel and copper intensive. And in particular, in terms of your question, countries find that it kind of was a kind of serendipity, really, in the sense that, all these countries wanted to stimulate spending on green energy projects. And as I say, government spending is a good way to get the economy moving. And therefore, that was a great opportunity to really pump money into these kind of projects, whether it's building power networks or, encouraging EV sales. So in many, many countries, we've seen, being a favored route to pull the economy out of the COVID slump. So, that applies to China, it applies to Europe, it applies to many, many countries. So yeah, definitely that's the way forward. And when we look at the US in terms of the amount of money that they're planning to spend on infrastructure, of course, it's pretty gigantic, trillions of dollars. So, they have the kind of will and the money there to try to get these things moving quickly. I think sometimes, though, it's a surprise for people how difficult these things are to get moving, because I think it was a quote from Obama who said, when you want shovel-ready projects to get moving, it's surprising how few of them are really there ready to go. So I think we're definitely, it's definitely supportive, all this stuff of, more copper, more spending on infrastructure, more steel. All these markets are going to get a boost, but it's not easy to get these things done.
I agree. I think COVID was a perfect reason to accelerate the green transition, whether you want to call it a green recovery, build back better. I think there's a whole bunch of phrases that are being used out there. It was an opportunity, I think, for governments to really push this agenda forward. And it has the buy-in not only from governments, obviously, but also from consumers. We remember during COVID seeing photos, for example, of the Venice Canal and dolphins swimming in it again, and you realize how important, the climate impact is, and that has really pushed the agenda forward as well. I think all the weather disruptions that we've seen throughout the year, which is not COVID related, but certainly climate related, have also pushed the agenda forward. And so I think this is all accelerating out of COVID for myriad reasons, but that's what we've seen over the last 12 months. And in terms of net zero targets, we have seen a number of commitments from governments over the last 12 months. Some of them are actually being written into law. Many of them are proposed. We've seen the ban of internal combustion engines being pulled forward. So now the EU is proposing to ban ICE across the EU by 2035. And we're starting to see targets announced in Canada, in the US. Even Australia's got some targets going. So, it's picking up pace, and that's going to accelerate the innovation. And this is going to be very, very copper intensive.
Yeah, I think one of the things I'd add to that is, I was actually quite pleasantly surprised at how every nation has sort of communicated quite well on this COVID issue, and I tend to agree that we seem to be working a lot better together to understand this this move away from the fossil fuels. And you're absolutely right. I mean, Australia is a good example of a country that is under pressure from other countries around the world to get our act together, if you like. So we are seeing that communication and probably that peer pressure from other nations as well, which I think we may not have seen as much of before COVID.
Right. So we have a bit of a technical question that's come in. I'm not sure if anyone amongst our panelists has a view on this, but they asked, do you think there's a convergence of electrical and data lines in the future, making use of copper more efficient by combining electrical and digital transmission in the same cable structure? But
I can't comment on that.
Might be a bit technical for.
I suppose what we know is that in terms of copper wiring, of course, there's always this constant attempt to kind of thrift and minimize the amount of copper you can really use. But I think what we've seen, certainly over the past 20 years or so, is that, of course, when we're talking about moving around electricity, at this point, you can only really do that with copper and aluminium. And of course, aluminium is really largely confined to the overhead power lines. So, when we talk about this green energy revolution, the interesting thing about copper is actually that there aren't that many substitutes. So if you think about, all around us, all our computers and phones and all these things have got copper in it. And, there aren't that many ways you can go if copper prices get really high. There aren't that many opportunities for substitution. So for me, I don't know the answer to that question, but it seems to me that, from all the people I speak to, that copper is always going to be in this position where we rely on it really for keeping the world connected and for transmitting electricity. So, without copper, we're in real trouble. And, of course, with high prices, there's always that attempt to minimize the amount of copper you use. But technologically, it hasn't really changed that much in terms of the past 20, 25 years that I've been looking at things.
My interpretation of that question is whether we can install copper along fiber optic. If I'm not mistaken, is maybe what that question is about, which obviously they serve very different purposes. One is for data and one is to transmit electricity, as Dan mentioned. So does it make sense to install them at the same time? Why not? That would be convenient. Does that necessarily impact copper demand? Not really, because you need to grow out as much transmission capability as you need to build out, and same thing with data and with 5G and all the installations there. So it makes sense to, obviously, I think from an efficiency perspective, put them together, but they're driven by slightly different end uses, and so that's ultimately what's going to drive demand anyway.
I think maybe we can shift off of this topic for a little bit. I wanted to bring in Max to speak a little bit about the Culpeo Minerals IPO, which recently happened. You just had an oversubscribed IPO for trading on the ASX. Looking back at investor interest, I wanted to know if you can share some details about the interest in the IPO that you had, as well as investor interest. Do you think, does this come in line with the general interest in investment into the copper exploration industry that we were talking about previously?
Yeah, no, thanks, Amy. Look, we did have a lot of interest. We're a new company, about to list on the ASX. Actually, the listing will take place on Friday, the 10th of September. So we were oversubscribed. We went looking for $6 million Australian in our IPO. We got offers for almost double that. So there was a significant amount of interest, particularly in Australia. Australia, on the ASX doesn't have a lot of pure copper plays. Australia is quite well known for its gold exploration companies and its nickel exploration companies, and obviously recently quite a lot of lithium companies. But surprisingly, there isn't really a lot of copper-focused exploration companies on the ASX. So we filled a gap there, I suppose, in the market. I think the other thing that was interesting for the investors was we are targeting projects in South America, in Chile, which is obviously the world's #1 copper producer. It's a good place to do exploration. The mining philosophy there is very proactive. The ore bodies have well, the areas that we're exploring in the ore bodies are quite high grade. We're sort of shying away from the lower grade porphyry coppers. They're fantastic ore bodies to find, but they're big, they're very capital intensive. We believe there's a bit of a niche in the market, as I sort of touched on before, that a medium size, higher grade, small footprint, and as Jessica mentioned, the ability to build a mine and tick all those green energy issues as well, I think is very important going forward. People don't really want to hear about mines that aren't pulling their weight, I suppose, when it comes to the environment. So I think places like Chile, you do have the ability to find and explore those styles of projects in the future.
What other mining jurisdictions? So you talk a little bit about the benefits of Chile. Are there other kind of interesting jurisdictions or regions that you found of interest in this space?
Yeah, well, just on Chile before we go to some of the other places. Chile's an interesting.
If you want to.
Yeah, Chile's an interesting one in the fact that not only is it prospective for copper, but they've also got quite a intensive solar energy system over there at the moment. So you can build a mine there. You can source your power from solar. You can source your water from desalination plants. And I think these are all very important going forward. I think, to be realistic, exploring in the jungles of Southeast Asia, they probably don't tick the boxes as much as somewhere like Chile. And I think, as Dan mentioned, the Congo's another place where the environment for finding the ore body and also building the mine, I think you can achieve that end game of a zero carbon footprint or whatever the company decides is its philosophy. Africa is probably not a bad spot, given the fact that the ore bodies are large there. You don't have as much of an issue with topography. You don't have as much of an issue with possible pollution downstream in waterways and things like that. Southeast Asia, although it has had a lot of success over the last 20 years in finding reasonable copper ore bodies, I think it will become a lot harder to do work in those sort of tropical environments, put it that way.
And so we have a question coming in saying a few market participants see short-term surpluses in copper to 2024-25. Are there risks to this forecast for copper to go into deficit, supply or demand?
Yeah, no, I think it's a good question. So, I mean, what we know is, of course, the copper market balance is all about supply against demand, right? So I think Jessica's argument really is that we're going to see this demand boom quite early. And I think 2025 is an interesting point because I would say the next couple of years or so, I think it seems to me fairly clear that we're going to see an oversupply, I think, say 2023, that kind of time frame. But 2025, I think it is much more in the mix because, we know that forecasting demand is, it's very difficult to do, right? It's difficult to do in normal times, let alone when you're in the middle of this massive transition. So, as kind of economists, we like to kind of model what happened in the past and kind of project it into the future. Whereas at this point, of course, we're all struggling to figure out, what are the structural changes that are taking place and how quickly will they really come through? And a lot of this, of course, is really overcoming bottlenecks. So, for example, we're now pumping out loads of electric vehicles, but, what happens in terms of recycling, that's all going to be picked up. What happens in terms of battery failures, all these things are being picked up more widely now. And then, of course, the charging infrastructure in many countries is still quite weak, even though there's lots of investment going out there. I think for many countries, the power and charging infrastructure is still not good enough for many people. So, and we're still at a point where, VW is just launching some of its mass market vehicles. So, we know that Tesla's been very successful with its high value vehicles, which tend to have decent range, decent speed. But, they're talking about, $80,000 a car, whereas the mass market really is about $20,000, $30,000 a car. So nobody's really kind of proved that concept yet. And when we're in the midst of these structural changes, there is a lot of scope for kind of, I would always think about things in terms of range. That it's no good having a kind of spot forecast really, because that's probably going to be wrong. But I think, I would agree with Jessica that 2025, we could be in a really, really interesting environment for copper where, we're more likely to be in deficit, I think, by then than surplus, I have to say.
Yeah, I mean, I think the driver of the short-term surpluses, as Dan has pointed out, are a number of known and financed expansion projects that are taking place. And so we know that those are coming online. Is there a risk that they don't materialize as we're expecting? Possibly, but for the most part, these are well-run companies with decent operations in terms of their management team. Everyone likes to point fingers at each other and say that person's not going to do it and that guy's not going to do it. But we know everybody works together to make sure that operations and expansions are taking place. So I think that's kind of what drives this short-term surplus. And so exactly as Dan said, the question becomes demand. Is demand a lot stronger than maybe some of these market participants are forecasting? And I would say probably yes. I think a number of market participants are underestimating how quickly demand really is going to grow because of the structural change. And not only the structural change, the fact that it is accelerating a lot faster than maybe we were thinking. So, when you look at, for example, EV sales projections 2 years ago, not very many people sat there with any conviction and said by 2021, over 10% of all car sales in Europe were going to be electric. That was very, very difficult to get buy-in for, but that's exactly what we're seeing now. And so I think this is just happening a lot quicker than people are expecting. It takes a while to make its way into forecasts because you have to really believe it. You have to almost have, halfway data points in the very, very near past to be able to believe what's happening in the future. But I think, if anything, we will see demand actually grow a lot more quickly than what some of these market participants might be thinking.
We have a question that's come in asking, what impact do you think the labor disputes seen at many of the large producers will have in the future as the copper producing companies start showing higher profits? will we see cost of production impacted materially, or will the impact be minimal on cost and on supply going forward?
I could probably make a comment on that. These labour disputes, they always happen when the copper price goes up, and there's always some toing and froing between the labour and the companies themselves. So I think it will have an impact. I think we've seen that already. The cost of getting copper out of the ground has always gone up. There's a couple of reasons for that. Obviously, higher wages impact on that bottom line. Also, the grade of some of these ore bodies has been decreasing. So, you're getting less copper for, it's costing more money to get less copper. So I think that set the bottom of this copper price is already set due to those reasons. There's no more high grade copper ore bodies, to be discovered. Most likely, they're going to be big low grade, or they're going to be high grade underground. So to answer the question, I think all of these factors play a part in that copper price going forward.
I agree with that. I think part of what drives copper prices higher is higher costs. A big part of that is declining grades, obviously having to move more material, but also labor costs. I think it's not necessarily just the labor disputes. I think there is something that is much more fundamental that is driving labor costs up. And that is the idea globally, again, something coming out of COVID, in terms of a push for equality and inclusion, in terms of how we operate our businesses and people, and ensuring, health and safety practices are up to snuff and are of high quality. So there's something more than just the occasional labor dispute that takes place every few years. There is something that is much more fundamental and underlying that is going to continue to push labor costs up. And that's something that we have to understand is going to happen and not push back against, because, without people, a lot of these businesses, they just can't operate. We can try to automate to make it more safe, but we still need people. And so that's a big part, I think, of what's driving labor costs as well, beyond just the occasional contract dispute.
And another question has come in, which is something that I think Dan started to touch on earlier, looking at the recycling and secondary market for copper. So do you see any significant impact on the copper price of growing recycling, or the push in the short or the long term? Is the recycling market getting up to a place where it's significant, I suppose?
Yeah, no, it's a good question. I mean, I think what we've seen kind of right now, actually interesting in China, is that China's kind of always had this kind of rhetoric that, it worries about the climate and environment and recycling, but it kind of never seems to be taken quite as seriously as that rhetoric implies. So, but I think what we've seen kind of actually in July, actually, funny enough, is China cutting steel production for the first time, but also the kind of general transition in metals. So, they're now starting to import primary aluminium in significant quantities, secondary aluminium as well, which they've never done before. So this is all part of it could be a kind of big shift this year, finally, towards China really, really focusing on recycling its own metal. Because, of course, the demand boom that we've seen in China over the past 20 years implies, a scrap supply boom in the next 10 to 20 years. So, as long as demand is outpacing that scrap supply, it's not a problem. But nevertheless, you would expect scrap generation to rise really rapidly. So, if you think about what copper's going into all these cars, all that copper will come back out again about 10 years later. And even the wind farms, start to generate scrap about 25 years later. So I think the really interesting thing about China is definitely taking these recycling issues far more seriously. I mean, we know that, for example, kind of links into the whole climate change and pollution kind of agenda. So, we know that this year China was impacted really badly by flooding in central China. So there's one particular town, you've probably heard of it, which had I think it was a year's rainfall in 3 days. And lots of people were injured and there was significant disruption. So, the idea of climate change and focusing on recycling and using what you've got already, I think is becoming, it's moving rapidly up the political agenda, if you like. At the end of the day, China has to generate jobs, has to generate GDP, but nevertheless, doing that in a green way, I think is becoming really, really important. So just to get back to your question, I think at this point, we know that, secondary copper is only about less than 20% of the total refined copper. So it's quite small. But then there is also quite a lot of scrap being used directly by fabricators. So you kind of need to add that on top. So yeah, I definitely think we're going to see a kind of boom in scrap supplies in China and recycling of that scrap domestically. And that will actually chip away to some extent at the requirement for more primary copper, of course. So yeah, it's a long answer, but I think it's definitely something that's happening behind the scenes, and it's quite difficult to measure as well. So it's quite an interesting challenge, I think, for analysts and anybody that's looking at these markets.
I think so. I agree with Dan. I think the push for scrap supply and the fact that there will be much more domestically source scrap supply in China is going to play a big role in terms of the dynamics of that market, in terms of what they're going to be importing and how much. The Fraunhofer Institute in Germany did a study a number of years ago. I'm sure many of you who are involved in copper have seen it probably, where they actually analyzed the amount of scrap that's been in the copper market for, I think they looked over decades, and consistently, as Dan said, on the supply side of copper, scrap has been somewhere around 18 to 20% of supply consistently every year. So even as the market has grown, even as we went through the last China super cycle, scrap was always there at 18 to 20% of supply. And then again, on the demand side, we sort of say anywhere from 20 to 20% of gross demand is met by scrap. So that's fine. It all balances out in the end. I think as we go forward, it's quite possible that we sort of sit at the higher end of that range. So maybe scrap on the supply side ends up around 20, 21%, but the market is also growing very, very quickly. And so even if you have more scrap coming in, the market is still growing. And so I think we'll probably continue to see it be relatively consistent there, but it does mean that we need more capacity to process secondary materials. A lot of that will happen in China, obviously, because there will be a lot more domestic production of scrap. But I think we will also need to see that ex-China as well. And so we're starting to see a number of smelters and refineries really work at how they can mix the scrap in. And not only that, because there are, emissions and sustainability mandates by consumers, a lot of them also want to know how much scrap is in that copper cable that they are buying. And so a lot of these things are getting measured now. And I think there's a big push to be able to show that you've got scrap in your mix, because that takes your emissions profile down as well. So it's all part of a big, big equation that's taking place. But absolutely, the dynamics for scrap are changing.
Max, do you see this kind of impacting your business or kind of how the miners are operating overall?
Well, I think from our point of view, we all know that we need to find more supply. So I don't think it's not a detrimental impact on why we explore for copper and why people invest in exploration companies. I think everyone realizes that the copper out of the ground is still the one that is going to supply these deficits. So I don't personally see it being a problem, and I tend to agree with both Dan and Jessica. Is that I think we've got to accept that it's part of the business. It makes sense. I don't see it being a negative.
There's a question that's come in looking at resource nationalism. in some of the key producers. And I suppose, do you want to comment on the impact that that can have on the market in terms of investment, best routes, that sort of thing?
Well, that's back to the point that Jessica made. I mean, I think the respect for whether it's an employee or an Indigenous group in the area that you're exploring. I mean, I think mining companies have been at the forefront of dealing with that. We've always been respectful and obviously aiming to employ as many of the people who live in the region where the mines operate. I really don't think that's a problem, and I think mining companies are actually getting much better at it, and we really have been doing it for the last 10 to 20 years. So I don't see it being a negative going forward. I think that can be managed very easily.
Yeah, I think it's an interesting debate about the stakeholders within copper. So if you think about the governments, the producers, and the actual workers, you've got all these guys kind of competing for a share of the pie effectively. And I think some countries kind of do this a lot better than others. So places like Latin America and Chile seem to be much more stable in terms of their jurisdictions, and so people kind of know what to expect. I think other countries tend to kind of just suddenly, there's quite a lot of churn, of course, in Africa in terms of the approach to mining and the rules around taxation and how much share the government will take. And of course, these things are quite off-putting for producers. But I think the interesting thing is, of course, when you're in a kind of high price environment, of course, you've got a much bigger pie for everybody to share. And therefore, as kind of Max touched on earlier, you tend to have a lot more competition for that pie effectively. Whereas in the downswings, of course, everybody's getting squeezed on margins. There's not much to share around, difficult to push up workers' wages, these kind of things. So it's partly a kind of cyclical thing, which is why you often have a lot more strikes when you're, when you're in a high price environment. And of course, those strikes actually encourage higher prices themselves. So, the two kind of feed on each other to some extent, I think.
I think for us who sit here in the metals and mining sector, this is something, of course, we're all very familiar with, and takes place not only in certain countries, it's taken place in many different countries over the years, even the ones that we might consider stable now. Every so often there is some kind of tax hike that gets announced. So it does happen. I think it's important that we also recognize that this occurs in every single industry. We've seen a lot of risk in tech regulation, for example. This year, we've seen a number of policy shifts in China as it relates to property. So there are, other sectors that have to deal with this. And so does it necessarily just, have an outsized impact on mining equities? I don't think so. I think there are points in time when these types of policy changes will impact equities in many different sectors and change, the market's perception of what it is. There's also, discussions right now about a synchronized global corporate tax, right? That was just raised out of COVID by Janet Yellen. And so that is going to also have an impact in terms of where businesses are deciding to locate their headquarters and transfer payments and that type of thing. So it is across the board. It is not just mining. We happen to sit here and think of resource nationalism as something that is a big deal for us, but it occurs all the time. And so for us, it is not, one risk that is outweighed in this particular industry over others. It happens all over the place, and it's just something that we have to deal with. And over the long term, we need these mines. The deposits are located where they're located. We can't move them. And so we're just going to have to continue to work and deal with it. And as Max and Dan both said, it is about engaging the people on the ground. That plays a big role in that.
Absolutely. So I think we probably have time for one or two more questions from the audience. So I have one here. So the demand supply dynamic pre-2025 is something that we're not able to influence. But how does that dynamic look post-2025? Is there a visible pipeline of adequate supply coming on to meet the market growth? And if not, then what do we do?
Yeah, I'm happy to just start talking about that. I mean, I suppose what I've seen over the past 25 years is you often have, if you look at the copper projects that are all out there, of course, it tends to be quite a long list. So what often happens is that if you think about all the projects that could possibly happen in the next 20 years, there's an awful lot of them. And nearly all markets, actually, that's quite common. So if you look across all the base metals, there's loads and loads of projects that kind of theoretical kind of projects and possible, but it's translating that into a kind of reality, which becomes really tough. So many of the mines that have been kicking around have been, made no progress in terms of the past 10 years. They're always kind of in the pipeline. You think they're going to happen in the next 5 to 10 years. They never do. Obviously, OT in Mongolia is quite an interesting case study where, in theory, that was a great mine, one of the best greenfield mines that have come on stream for many years. But yeah, it's bogged down in all this kind of arguments between, stakeholders. So, in theory, that will expand and double probably in the next 5 years, but it all depends on, those kind of stakeholder relationships. And I think some countries are better at doing this than others. I think that's pretty clear. And, I think as Max has touched on as well, there isn't the kind of, we all want a really good quality mine project in a really good jurisdiction, and all these kind of things. And, possibly using green energy, and all these things often don't come together, so it's quite rare you tick every single one of those boxes. Very, very rare. You always have some kind of hiccup and significant problem or challenge that you have to overcome. And delays are almost inevitable, I think, for quite a few projects in tougher jurisdictions. So, there aren't that many easy wins out there. Otherwise, those mines would have happened already. Max, did you want to add anything to that?
Well, yeah. Interestingly, I've worked in Mongolia, and that's a good example of something that looked like a no-brainer. Fantastic ore body, not a bad place to build a mine. But the overall, sort of Mongolia was a relatively new mining country. Didn't really have a true and trusted mining regulation, procedure to go with. There's a lot of confusion in the early days. Like you said, the stakeholder communication was probably not good. People expected to make, I think the Mongolian government were hoping to make a lot of money out of the project, but obviously there's a lot of capital cost as well, which may have been confusing for people, and I think that's where they are at the moment. The capital cost has been huge. There's been blowouts. I mean, it's obviously cost a lot more than people thought it would. Like you said, there's not that many easy projects out there. There's a significant amount of large, porphyry coppers that are sitting in Southeast Asia that just they've had the feasibility study done, but to actually push the green light on a $5 to $10 billion project in some of these jurisdictions where previous people haven't had a lot of success. That's where those projects sit, and they're very difficult to go the next step and actually put that spade in the ground and start the construction.
The only other thing I'd add, which is I think quite interesting, is there's a certain kind of irony here in the sense that a lot of people are pursuing this kind of green energy agenda from an investor perspective, and kind of that actually means that they're kind of reluctant to invest in things like oil or mining. So in a way it's kind of they want to build out green energy infrastructure, but they don't want to invest in it in the first place. So this is one of the reasons why the US oil sector is not expanding particularly quickly, because people are looking elsewhere. But really you need to kind of take a long-term view, which is if we're going to need all this stuff and we're going to have all these EVs, you're going to need a lot of copper. So you have to invest in these projects to make that happen.
I mean, I think what's always clear, as you said, Max, is if you look at the supply pipeline, there's a whole list of projects, but if you actually try to, include in your supply model which ones are going to be built in the next 5 to 7 years, it doesn't look like there's enough supply to meet demand. at that point in time. So the forecast always looks like this, but it always gets resolved, because that's what we do as humanity, is we solve these problems. And if we need copper, we will figure out a way to build enough copper supply. Of course, what that needs is higher prices. And so there's always that same adage, right? High prices cure high prices, and low prices cure low prices, and all of that good stuff. But what we know about the copper market in terms of where demand is going is those high prices need to stay higher for longer in order for us to be able to meet that deficit that we do see in 5 to 6 years, the big deficit that we see in 5 to 6 years. And if prices come down, that's going to sort of push out that deficit a little bit more. But even every single time we get to a point where low prices are curing low prices, that level of that low price is moving up as well. So the entire range of copper prices continues to step up every time we've got this new source of demand. And so that's kind of where we sit. So to answer that question, post 2025, we certainly need higher prices from where we are today that are sustained in order to be able to have that supply come on out of that big list of projects that Dan's got sitting in his model.
Well, that actually seems like a nice place to wrap this up. I want to see if the panelists have any kind of final points, any follow-ons from what Jessica just said before we wrap up this discussion.
No, nothing else from me.
Great.
Nothing from me. No.
All right. Well, thank you to Jessica, Dan, and Max for this really kind of interesting discussion on the copper market and where we see things going up until 2025 and beyond. Thanks to all of the people in the audience for the questions, and we look forward to welcoming you to one of the one-to-one mining investment events soon. So thanks, everyone.
Thank you.
Thanks, Amy.